How do you describe the value strategy?
Very rarely this kind of large payout will happen, like you mentioned. Now, what happens? What is a value strategy? Fundamentally, it's a low priced stock or a stock whose basic value, let's say book value, for example, is say 10 rupees. But with the current situation, the book value is 3 rupees. So you would call that this is like a deeply undervalued stock just by using this one parameter. Does this happen? Yes, it happens for a fact, and it happens with many companies at many times. Assets are large, profits have happened, they have accumulated, and from an accounting point of view, book value is at 10 and the stock could be at a 3 or 4 at the moment, which means it's a great buy. You see, that's one of the ways of looking at it. Then price to earnings ratio. If the industry, if the competitors of that company that the company is working in, the industry or the sector that they're working in, if the average is say 20, and if the company that you're looking at, if that P ratio or price to earnings for that is about 5, then again you would say that that's an undervalued stock. But A, hard to define, and B, a lot of times stocks are undervalued because they are maybe a utility company, or they are just doing the same thing year after year, because they are going to maintain their balance sheet, but they are not going to have a huge growth in sales. So the earnings will continue, the dividend payouts will continue, but capital appreciation will not happen so much. It happens in many public sector companies also, that we see that sometimes the valuation could be really, really cheap, but you would never really make money out of it. It's not a wealth creator because that company is not interested in going and making new acquisitions or making inorganic growth or anything of that sort. So there are lots of ifs and buts that happen with a value strategy. Sometimes, like you said, the rewards work out. You identify a gem, and you feel that, and the value strategy actually comes out in times of depression, in times of a crash, where there is an exuberance of everything. So when the markets have fallen, sometimes even the good guys get beaten very badly, right? And in that sense, when a good company you find at a very, very low valuation, then that's the time the value strategy will work. But otherwise, most of the time the market is in a trend. It's in a broad trend. I'm not talking of a short-term trend, but I'm talking of a medium to long-term trend. And the trend is normally upwards. So in an upward trend, it's so hard to find value sometimes. But that said, it's not a bad idea. And one must look at some of these parameters so you know what price you are paying. Sometimes you don't want to pay an exorbitant price, but sometimes you want to pay a reasonable price for somebody who's growing at that speed.